Bitcoin for the last few weeks has basically been in this sideways trading range. We've been slightly down, slightly up. Basically, for the last 4 weeks, we haven't moved at all in price, but we're still holding this long-term exponential moving average to the upside. Plus, this long-term upslope in the trend line is telling us that the long-term trend is pointing to the upside for Bitcoin, so we can expect more long side momentum in the near future. Plus, with Ethereum, we're failing to break to the downside. We're also failing to break to the upside. There's a lot of wicks in this current market, meaning there's a lot of failures. There's a lot of sellers as soon as we get slightly higher prices, and there's a lot of buyers when we get these slightly lower prices in here. So we need to be looking at what the current price is doing, slightly scrolling out into a longer term time frame to figure out what the best course of action is. Plus, I have a lot of crypto news to go through with you today, plus some very interesting stock news from Michael Burry. So stay tuned and make sure you smash the like button, smash the subscribe button, and tap that notification bell to stay up to date with all of my latest YouTube videos. Plus, make sure to check out my trading masterclass that's currently 50% off in this video description, where I teach you everything you need to know to become a consistent trader. Let's begin today's crypto news with talking about Michael Burry, which I'm sure you've seen The Big Short, the movie. Michael Burry, it's based on his true story, and he's very, very accurate at actually predicting market cycles and specifically predicting big recessions in the market. So we can actually quickly look at this graph here. When looking back, 2015 saw a crash coming in just a few months, and in 2017 was talking about a global financial meltdown coming. 2019 saw a massive bubble in index ETFs. 2021 talking about that market bubble crash coming soon. Now in January of 2023, we've got this recession sell, and in August of 2023, he's actually committed to being short in this current S&P market. Now, you might not think that this is a massive deal, but Michael Burry of The Big Short just spent $1.6 billion on a stock market crash, and he's been extremely accurate in the past. As you see, The Big Short was basically based on the 2008 massive financial crash, and Michael Burry was one of the first people to actually call exactly what was happening, to understand exactly what was happening, and to actually put his dollars on the line to say, yes, I'm going to bet against the market expecting a crash. So he's gone in with a $1.6 billion market crash. Michael Burry, the Big Short investor who became famous for correctly predicting the epic collapse of the housing market in 2008, has bet more than $1.6 billion on the Wall Street crash. He's making his bearish bets against the S&P 500 and the NASDAQ 100, which are basically the two largest US stocks out there. According to the Security Exchange Commission filings, Burry's fund bought $866 million in put options, basically betting against the S&P 500 and another nearly $800 million in against the S&P 100. So you can see 90% of his portfolio is actually betting on a market downturn. So massive. He's been very accurate in the past. So we might not be saying this is guaranteed that we're going to have this market crash coming soon, but what it definitely does, and it's actually putting lights, these alarm bells are sort of going off, that Michael Burry has been very accurate in the past, and we need to look and at his track record. He's very accurate. And when we actually come over to the price of the S&P 500, let's actually come over and look at the latest S&P 500 price, or actually scroll out onto this weekly time frame, and you can see that we've already for the last 3 weeks had a consistent 1, 2, 3 down ticks in the market already. When we actually flick over to the daily time frame, you can see we have had a little bit of a downturn from this probably high from all the way through here, already down close to 4%. 4% is billions and billions of dollars in the S&P 500. So obviously still massive, but overall having very consistent down days, 1 uptick, 4 down ticks, 1 uptick, consistent down ticks. Still got a few hours left on this bar. So overall, when we scroll out and look at this market, we're nearly at these all-time highs that happened back in this early or late 2021, early 2022 region at this $4,100 level. at this $4,800 level. We're currently at this $4,400 level, and this is where Michael Burry is expecting. We're going to make this lower high, not break through this top, and then break through the market to the downside. Obviously, just looking at the weekly time frame here, we can see we've got an uptick in the market, so cannot exactly confirm that the market is going to be trending to the downside. But again, we can look at Michael Burry, we can see in the past he's been very, very accurate, so we just need to be cautious and at least take his words into account when we're looking at future bets. And lastly in the news, this is a chart that I did show in recent videos. It just talks about periods when you make money. A, years in which panics have occurred and will occur again. So you can see A, 1927, 45, 65, 81, 99, 2019, 35, and in B, good years, high prices, and time to sell stocks and values of all kinds. So we can see B, what's actually happening here. We're coming, the next actual time is this 2026 region. Then C, years of hard times, low prices, and a good buy to buy stocks, goods, etc., and hold till the boom reaches the years of good times, then unload. Years of good times, at least in these B years. So you can see right here in this 2023 region, we're actually expecting years of hard times. So what does that actually line up with? Nearly perfectly lines up with Michael Burry's expectation of this market collapse, which would actually line up with this 2023 years of hard times. It would then lead us into this 2026 region when we would be looking to sell in the market. It would nearly perfectly line up with the 4-year Bitcoin cycle. It would nearly perfectly line up even with the halving cycle, how we've looked in the past. I've made videos on this, how we actually push into the halving event, then have a small little collapse in the market, and then have a massive write-up going out of the halving event. So overall, these periods of when to make money have been very, very accurate in the past. And why not just follow something that's been extremely accurate? You don't need to be day trading every 5 seconds in and out. You basically holding, swing trading, and investing in the market. As I spoke about before, there's really not that much happening in the crypto news, because the last few weeks you can see we've basically been sideways. We've been slightly up, slightly down. Prices have not moved. We've still got the positive trend on the EMA. We're still holding above this positive trend line on this trend line trading strategy. The only time I'd be looking to get short out of this trend line trading strategy is if we were to break below this trend line, all in this area through here. Currently, I'm in a long position. We're coming into this value area for the 20 EMA. We're right now coming and using this as a support zone. I'll really need to see a clear close below, a finish of the candle close on the weekly time frame, closing below this trend line, not just a small little wick and then we can keep going up. Need to see a proper close, but until then, I'm still long and strong in this current market. When we scroll into a shorter time frame on Ethereum, you can see that there's a lot of wicks in the market. It shows that there's a lot of buyers coming in. There's still a lot of sellers coming into the market. Overall, people, we're still in this trading range area where we're basically failing to break out of this top side, failing to break out of this bottom side, and prices just bouncing, and that's what people are doing. They're just scalping 3%, scalping 2.8%, scalping 3%, scalping 2.8%. So you can see 3%, 3%, 3%, 3%. While we've been going sideways for the last basically week, people have made 12% on their account because they've been trading 3%, 3%, and they've been understanding that we're in a trading range. You just need to be understanding what type of price action we're in. Overall, crypto market is still slightly boring. Again, very similar for Ethereum when we scroll out to this weekly time frame. Right now, we're right in this value zone. I love this value zone right between the short and medium term EMA. Overall, still looking to go long in the market. Nothing is telling me to go short just yet. So still looking to get long potentially with this 2023 crash. Hopefully it doesn't line up with crypto as well. Obviously, when we get a crash in the stock market, it usually lines up with a big crash also in the crypto market, unfortunately, but we should then see a big power out of that, especially coming into this halving event. Really hope you've enjoyed today's video. Smash the like button, smash the subscribe button, tap that notification bell to stay up to date with all of my latest YouTube videos. Make sure to check out this video description where I have my trading masterclass at 50% off, where I teach you everything you need to know about trading. Really hope you've enjoyed today's video. If you'd like to continue watching my YouTube videos, click the video that's on your screen right now.